Is a recession bullish for gold and silver? And what in the world just happened earlier this week? I mean, where are gold and silver headed from here on? Why did they drop with the recession worries or whatever else was happening? And what type of equities are set to survive or dare I even hope thrive? Those are kind of the main topics of discussion, Lobo, that I have here that I want to go through with you. And then, by the way, for people listening, I also have two gold CEOs to interview right after Lobo, with one repeat guest and one new company intro. So quite a lot of stuff to go through this week. This week's real money talk. But Lobo, I'll kick it off with, as I said, strong timing to have you on. So I guess I'll pat myself on the back for that, and maybe pat you on the back later on. We'll see. I don't even know where to start this though, because I woke up yesterday and Japan was going to zero. The economy was a wildfire, and Jim Cramer was talking about gold. And then I woke up this morning and it was all fine. All the problems had gone away. So I thought I'd just ignore everything until I'd spoken to you. And especially because you published a report a while back and then you republished it yesterday as all of this was happening, asking a very simple question, that being, has the piper finally come to collect his due? So talk to me. Has he?
Well, I'm not a Kramer person. I mash the buy button and jump up and down on TV. In fact, Kramer buying gold is the most concerning thing that you said to me just now.
Hmm.
But believe it or not, my answer to the question is, I think so. Like, not today. I'm not saying that yesterday was the beginning of the next 2008 waterfall event. A lot of people got all excited about that yesterday. But my immediate response is, don't forget the money helicopters. Like, we have to see what the power is. Like, even if things start, today we're having what is either, just kidding, never mind yesterday, it's all fine, or a dead cat bounce. I'm inclined to believe it's a dead cat bounce. And that I have long, people know valuations are stretched. Even mainstream economists, not tinfoil hat Lobo, right? The people you see on Bloomberg or Yahoo Finance, they kind of snicker about the high valuations and then say why it's okay to just ignore that and buy anyway. But everybody knows this. So, the analogy of the long-tailed cats in a room full of rocking chairs is, I think, quite apt for the stock market today. And I think yesterday's kerfuffle shows exactly that. The moment something didn't go right, just people went boom, headed for the exits. And today it's kind of like, oh, it's not so bad, but I think that tells you where we're at. The tails of the cats haven't gotten any shorter, and the room is not any less full of rocking chairs. Okay, there's one more bankruptcy this morning, but that's not helping. More layoffs, more other news. So I have been writing for some time that I'm in team hard landing. You and I have discussed that. And this year, boy, it sure seemed like team soft landing was morphing into team no landing. Everybody was cheerleading. And the number of voices saying that if we hadn't had a recession by now, we're not going to have one, just kept growing and growing. And I'm not the only one who said this. Adrian Day, amongst others, have pointed out that the long and variable lags last on average about 27 months, which meant it would merely be an average long and variable lag if it started showing up last month in July. It was only, a few days ago. And lo and behold, that's when we started to see the cracks not only appear, but widen in the labor market, which has been, the foundation of American exceptionalism now. So sorry, long-winded answer. I started by saying basically yes, and now I'm telling you why. Like, all these things that I've been looking for, and I've been early on, I'd admit, I see them starting to happen now. So this is an unusual position for me to be in, because, and I'm not in the, the head for the bunker mode quite yet, but it seems to me that it is happening. Like, these things that I've been expecting, the data is increasingly supporting my position. And I think my portfolio is going to do really well. The rest of the world, I'm not so sure.
Well, and when you say your portfolio, I know that's partly at least weighted in gold and silver, and I basically see two reasons quoted out there for gold and silver to keep going up, really, not start going up. And one of those is panic. I'm not sure I like that reason too much. I've never really bought it, I think. What I am buying, though, or what I am understanding is, as you said, money printers, helicopters are to be fired up again. So as Lynn Alden likes saying, nothing stops this train, right? More money printing, more inflation. So bullish gold, therefore. That's kind of how I see it. But why didn't gold and silver? Why did gold and silver fall initially as well with this whole panic thing?
Right. Well, first off, Lynn Alden's position, fiscal dominance, doesn't matter what the Fed does. So in the first place, like this whole business with the rate cuts, you can, if you buy Lynn's argument, you can kind of set that aside. That's not going to help. It could make things worse. So set that aside for the moment. The money helicopters, though, doesn't just mean the Fed. It can also mean Congress, right? Through no fault of their own. The recession is nobody's fault. Let's just send them more money. So the Fed could actually stick by its cautious approach. And if we see inflation pop back up, the Fed, despite all these theories, just because the stock market had a bad day, or even if it has a bad month, that's not their mandate. And they would lose credibility if they jump in just because the stock market is falling. They would need to see other things. They would need to see the labor market weakening as well. That is their other mandate. So even if privately they do care, we all know from the recent scandals and exposures that a lot of those guys invest, right? So even if they do care, I think they're going to want cover from another weakening data, jobs report, or more weakness, i.e. higher jobless claims in the weekly numbers, things like that. But let's say inflation goes back up again, PCE goes back up again, and they're stuck, right? Maybe they hold off on the money helicopters or theirs, but that doesn't mean that Congress does. So don't forget fiscal dominance. Thanks for bringing up Lynn. Now, to answer your question, well, first, people are like, oh my gosh, what's wrong? Gold's off. It's like gold sells down to 2,400. Get a grip. Like, really? If 2,400 is a disaster for gold, seriously, that is a price at which the actual business of mining for gold makes tons of cash. You have to be a seriously bad miner to fail to make money in this environment. And anybody who's losing money in this environment, well, there's a litmus test for you. If you've got people that are losing money in this gold dollar exchange ratio environment, those are candidates to prune from your portfolio. So my first answer is just like kind of, have a sense of proportion here. A wobble to 2,400 is really not significant. And the other thing is, like, look at everything else. Like, the cryptos are down in double digits. The major stock indices, depending on the time of the day, down 3, 4, 5% over the course of the day. And gold drops 1%. Like, really, that is gold outperforming. And we also know that when there is a panic, when there is a liquidity need, when margin clerks are calling you and saying, not do you want to sell something, but you are selling something, what do you want to sell, right? You sell what can get a bid. You sell what you can get the best price for, and that would be gold. And especially if, and this is something I wrote about in my free weekly digest, and it's funny, I wrote about this Saturday, and I've heard it parroted now, and I'm not saying they're copying me or whatever, but it just seems very obvious in hindsight to even mainstream financial types. There are people who are saying, well, gold's up this year. So when you sell because you got to, not because you want to, you sell, what's working, what's up, so that you have some profits to roll back. So I think that during the sell-off, we saw the generalist investors who are starting to pile into gold because it's up, like momentum chasers, not gold bugs, not people like you and me, not people who have been sitting on their stash since 1970, right? The Johnny-come-latelys that just bought gold because it's up this year, those are the people that tapped into it as a source to cover their margin calls. And why would it be down today? As you and I are recording, the markets are rebounding. So why would it be down again? Well, I don't think that all the fear has gone away. I think it's dip buying today. And where are you going to get cash to buy the dip? If your stocks are down, if you bought NVIDIA and you're down 24% or 30% or whatever the heck it is, but you believe, that AI is it and NVIDIA is going to go on to another 10-bagger from here or something, well, you're not going to sell other AI stocks or something. You'll sell something that you don't really love or care about or understand well, like gold, because it's up. You can use it as a source of cash. And in a way, that's gold doing its job. If it's a rainy day fund, if it's insurance, people tapping into that insurance in a market, major market event that actually makes sense. So those are my two answers. One is I see gold doing its job. And two, have a sense of proportion. If the worst of this profit taking and this dip buying rotation and all of that is to knock gold back to 2,400, we in the gold business don't have a problem with this.
I like how you low-key insulted me for being a gold bug, but given my hair color, I owe my allegiance to copper. So I am a copper bug by definition. But it's also interesting when you say that when you talk about what you sell, you don't sell your AI stocks that you believe in and you understand, you sell your gold. That's interesting in particular because
generalist investors.
Yeah,
I mean, that would be like you and I, or maybe more silver-haired gold bugs. Gold goes down. We don't sell gold or silver to buy more gold. Usually we will sell something else and we'll see the opportunity to back up the truck on gold. Like in 2008, I would have sold blood and had garage sales, hawked one of my children something to buy more gold when it was down around 700. That was just such an obvious screaming buy to me that, I think I asked my employers for an advance on my pay. It was just that good. I didn't sell gold or silver. I bought more.
Yeah, we do have plenty of children to sell, so nobody would blame you for selling at least a few. But what I mean is exactly that, because and I don't know if this is true, by the way, I didn't confirm the data, so this was bad journalism here already. But there was an article on gold.
I have many children.
There was an article on goldsilver.com, which is a gold bug site, granted, but saying that Google searches for buy gold went up 64% as the market crashed yesterday. So yet gold and silver didn't go up 64%, which is of course disappointing to me. So there's this data here and I think that's coming from generalist investors. I mean, where would a 64% spike come from otherwise?
Yeah, it wouldn't be from normal gold bugs. They're looking for that anyway all the time. Well, that's interesting. Here's another point. You didn't ask this, but I'll throw this in there. The Asian buyers, at least for gold, we've talked about central bank gold buying. It's been a major driver for the last year or two, really since the weaponization of the dollar on the Ukraine war. But them guys ain't dumb. They don't want to pay an all-time high nominal, price for gold. So if you have a gold correction, then that's the time when you'd expect the savvy buyers, the big ones, to move in. And it's really striking to me that, for the last couple of years, gold's been fluctuating around 1,900, 2,000, which is, a terrific level to be fluctuating at. And for a while, it seemed like 2,300 was the new 2,000. And now it seems like 2,400 is the new 2,300. You see where I'm going with this? Like if it's true that there's still plenty of appetite for the global South or BRICS or whoever, non-OECD central banks to buy gold, then there's a huge buy the dip support out there. And I don't think that's a big if. Is there appetite out there? That's manifest. The latest numbers I saw, okay, China's backed off, but the rest haven't. They're still buying. The net central bank gold buying is still positive as of last month. So I don't think that's a big stretch. And if that puts a floor under gold, going into the recession, now becoming like as we were saying before, I've been almost the lone wolf out there talking about the recession coming anyway. And now it's not just cracks in the labor market, it's huge widening of those gaps. The SOM rule, right? Or I like to reference the gun-like rule, where these lines cross on these charts. These are not leading indicators of recession. They're coincident indicators of recession. The gun-like rule has an 80-year track record of pinpointing, not pinpointing, of showing when you're in recession. Like in hindsight, they will recognize that we're in recession now, unless the gun-like trigger is wrong, for the first time in 80 years. So I don't think I'm way out there. I just think the data is finally showing the cheerleaders that they've been overly optimistic. And so, as unlike me as it is to pull a Kramer, that's why my initial answer to your starting question was simply yes.
Yeah. Buy, right? But I do want to talk about China, which they apparently have not doing the buy in the last couple of months. But just one more note on generalist investors potentially entering the space due to one of those two reasons that we discussed earlier. There was a Goldman Sachs analyst or a couple of analysts, one of which said that long gold positions now offer the greatest hedging value across commodities. And he said commodities as a whole, which is interesting coming
After
from them.
Kramer, the next worst thing you could throw at me is Goldman Sachs, the wrong way Corrigan's. Well, especially after Jeff Curry, who was pretty good on commodities. He's gone from that shop now. But, for so many years, Goldman Sachs was the contrary indicator for the gold dollar exchange rate. Anyway, so no, but sometimes broken clock is right, twice a day. Sometimes something is so obvious that even the investment herd gets it right. And, again, you don't have to be tinfoil hat Lobo calling for some great world changing event or something, the end of the dollar, or whatever. We're looking at recession. Like the team no landing is gone. Team soft landing is sort of having a conversation with team hard landing again, wherever it comes out. The recessionary writing is on the wall. That's bullish for gold. And that's not just me. That's a mainstream thing. And rate cuts, that should be bullish for gold. And so those are the things that are, if not guaranteed, then, they look about as sure as anything is in the investment world to me. If on top of that, inflation remains higher than the Fed's target or starts heading back up again, well, then you start talking stagflation again, and everybody's going to remember the 1970s. So you talk about these Google searches and things. When people want to know what works in stagflation, the number one choice is actually not even the dollar, because you're losing value in inflating currency. The number one choice is going to be, well, if they go to the 70s, it's going to be oil and gold. And maybe oil works again because of the Middle East troubles and so on. We can go many ways from this, but experienced investors will know it's risky to buy oil going into a recession. On the other side, it's another thing. But I mean, when recession took over the headlines yesterday, oil dropped. I've got gold and oil on my mind, and I said goil. I meant oil. Oil dropped initially on the recession scare, and that's absolutely par for the course. That's what, demand for oil goes down in a recession. So that's a very logical response. Then Middle East reminders came back, Iran notching up the rhetoric, Hezbollah and Israel trading shots at each other, and oil came back by the end of the day. But the reaction showed what I'm saying. So if the main things that anybody's saying, oh, what do we do in stagflation, are gold and oil should be weak going into a recession. Notice I didn't hold the middle finger up. Then that leaves gold. So yeah, I think there's an argument to be made. This is an if not when statement, but I think there's an argument to be made that we could see something like a 1970s style mania in gold. I know that some of my esteemed peers are saying that's a guaranteed thing. That's the future. We're just waiting for that 1970s mania. The world is different. I don't know that anything's guaranteed, but I do think that's a possibility. And again, even if nothing like that happens, and even if we get a garden variety soft landing recession, it's still a recession. They're still talking rate cuts. They're even talking 50-point cuts. That's bullish for gold.
I think Lynn Alden is...
Sorry. You also mentioned silver. We can come back to Lynn, but I got to say, silver has, as you know, people calling me Darth Silver, all stuff. It's been acting more like an industrial metal for some time. That's been a concern. This year, silver's been tracking gold very closely. Even yesterday, silver tracked gold, but much more downside. And so the industrial side can't be overlooked. That does make me nervous. I still have silver on my shopping list, silver stocks on my shopping list. I'll buy bullion too, I guess, if it gets cheap enough. But I still think that people should watch that closely. And if silver starts following copper going into the recession, that would be bearish. Right now, given the choice, if I only had money to buy one stock and I had equal choices of a gold and a silver stock, I'd buy the gold one.
Okay, that's a strong note. That'll make a good clip for Twitter. People like that.
People will hate me for it, but I'll stand by it.
Who do you think will be buying our gold and silver by then? I mean, just last week, as you mentioned, so I read an article claiming that the Chinese central bank had stopped buying gold for during the months of May and June, I believe it was, and they were kind of a beacon of hope, if you will. So who's going to be buying all the gold and silver?
First off, they've reported that. So as claims go, does anybody believe anything the Chinese report? I don't know. I'll take it with a grain of salt. But it's not like, some gold bug website made this up. The Chinese authorities have reported this. The PBOC has reported this. So I think this actually, if anything, extremely bullish. If everybody thought that it was China buying that was propping gold up, and gold remains near all-time nominal highs without China buying, that means there's a lot more buying out there that's not China. So if China comes back to the table, then that's even more upside from here. And this isn't exactly where you wanted to go. Like, who else is buying? You could just say the rest of the global South. I actually think the overall answer, I think part of what's happened this year and part of the hockey stick this year is that the globally speaking generalist investors are starting to hedge with gold. This thing that Rick Rule has talked about for a long time, right? The multi-decade mean of portfolio allocation to gold is 2%. And recently it's been 0.5%. So never mind some, everybody buying gold, but just a reversion to mean and global portfolio allocation would quadruple allocation to gold over now, which would have an obvious impact on the buying. I think that's been happening, quietly, globally, not just in the East. And I think actually the sell-off, the immediate liquidity response to yesterday's move supports this. And it's not just me, even, people on Bloomberg and Yahoo Finance and places like that, Wall Street Journal, are saying that people sold gold yesterday as a tap into liquidity. So it's not just me. So if that's Johnny come latelys, well, that implies that there are Johnny come latelys in the first place to do that, right? These are new people who've been buying gold, and not just people in China. It's people in the West. They're not gold bugs. They're not people who've been waiting since 1970 for gold to have it stay in the sun. This is just people who piled in because it was going up, and maybe some because of political risk, the 2 hot wars in the world, all this stuff. So I think that the absence of China not whacking gold is extremely bullish going forward, because I do think China will come back to the table. If you look at individual actions over there, from what we can tell from the outside, it's very bullish. And the digression here really is that I see a lot of trouble for China. I mean, they keep doing stimulus this, tweak that, incent this. Even if Beijing doesn't send out the money helicopters, local governments are. They're not just incenting real estate the way they used to, because that's kind of a taboo now. They're incenting consumer spending, like, stimmy checks. Go to the mall, buy stuff, we'll help you. These are panic level responses. When you're doing that, when you're giving people, when your government is telling people to go to the mall and buy stuff, things are dire. And so, this is, on the one hand, bad for commodities at large. I'm not just a gold bug. I look at other metals in mining. So if China's in trouble, that's very bad news for the commodity complex as a whole. It's another reason why I haven't been buying copper or lithium or oil even really ahead of the recession. If the factory of the world is sputtering, that tells you a lot about the global economy. And it's sputtering big time. And it just seems like for years now, nothing they've done has really helped. And I think that's a real concern. If I'm right about the global recession and China's weakness, this could be really big. I don't want to promise doom and gloom and the end times are here. I'm just saying this is a very large variable, and the signals from it are like 95% negative.
There's a couple of things that I also read about China last week. One of those being that instead of going for a new stimulus package for the infrastructure and manufacturing sector, they went for a rate cut. So essentially, or potentially hoping to become an advanced technology economy as opposed to staying that construction or manufacturing based economy, which in my opinion, short term, a lot of hopium, we'll see where that goes. And then to the point of them stopping the gold buying for a couple of months, there's someone shared with me an article by a guy named Jan Nieuwenhuis, which I'm pronouncing in my best Dutch accent. He wrote an article saying that the reported lack of buying of gold was actually not real, because he says, and I'm going to quote from his tweet over here, but he says, this article is an analysis of how the Chinese central bank buys gold in London from Western bullion banks. Because the bullion banks take care of the gold transport for the PBOC, the shipments from London to Beijing are disclosed in UK customs data. The customs data reveals that the PBOC continued to buy gold in May, when it communicated to the market that it discontinued buying at a rate of 53 tons. The PBOC stated it stopped buying to dampen the gold price so it could acquire more gold. So essentially what he's saying is, I'm not buying it. Here's the customs data from the UK. China's still buying gold. And then something else that I said, and I'm sorry for continuing on. I know this is a Lobo interview, not an Antonio interview, but I sent you this chart right before recording here. It's from Correlation Economics, showing that China gold premiums are rising again, which is also a very interesting chart. So those three things kind of combined, I know they might sound a little random here, but I don't think they're random.
Not random at all. It ties together. Well, first off, I haven't read the article. I don't know anything about UK customs data. I don't know how reliable, thorough, or comprehensive that is. So I really can't say, give that story a thumbs up or a thumbs down. If this guy has done some great sleuthing and told us something that we didn't know or couldn't know before, great. But, in general, we're cautious about anything China says. Could they say one thing to do another to get a better price? Of course they could. Nobody would be shocked and stunned to find out that that was so. And we've long known that, what they buy is, and what they import is somewhat trackable, but they also produce. China took over from South Africa as the largest gold producer, some years ago, right? And that domestic production is not accounted for in anything we can see in the West. So there's huge accumulation over there. But at that chart you sent, and I assume you're going to post it in the interview, I think that's really strong, because it backs up what we've heard from other places about, whatever the PBOC is doing, or whatever the institutions are doing, the people, the individuals are buying gold. Those little gold, that fad amongst young Chinese for the little gold beads and things. And there's all these stories that we're hearing about Chinese buying gold. And that makes perfect sense. This isn't one of those things where I can say, oh, I know for a fact that it's A, B, or C. But it is one of those things that makes perfect sense. China has a long, thousands of years of great affinity for gold. Gold and red are the big prestigious colors over there. You want to flash gold as a sign that you're winning the Confucian game. And the main ideas for saving, or the safe havens for storing wealth in China, have long been gold and real estate. And now real estate is, a minefield at best, if not just simply a bad idea and something to flee. And that leaves gold as the one man standing. I'm holding up the right finger again. It's twice I haven't given you the middle finger, Antonio, in one interview. So, this makes perfect sense. If you thought your life savings was safe buying another apartment in this ghost city they just built, and now it's worth 1/3 of what you put into it, what are you going to do with the savings you have left? What are you going to do with any extra money you have? You're not going to buy more real estate. You can buy, bonds, or, invest in some company that might get shut down if the EU puts a tariff on their product or something, or Trump or something. There are not a lot of choices for you. And gold is gold. It's always gold. It's been gold for thousands of years. I think it makes perfect sense.
Yes. And at the same time, though, what I'm thinking, or what I'm looking at, is the GDXJ, which I probably shouldn't be looking at because it's not really juniors. But why I care about all of this, and why I'm asking about what's happening and this and that, is because I don't have a large portion of my net worth in gold or whatever. I wouldn't, even if gold doubled tomorrow, I wouldn't really benefit from gold itself. What I would benefit from is my sub $10 million juniors actually doing well for once. So when is all this bullishness here going to translate into the smaller stocks doing well, and there being interest in Canadian capital markets, which seems to have disappeared?
Well, the way you ask the question, I think, gives you a key to the answer. When people keep saying, oh, the gold stocks aren't performing, gold's up, but the gold stocks aren't, what's wrong with gold stocks? Are they broken? They're often referencing the indices that you look at the GDX or the GDXJ and you say, well, gee, they're not up that much. And that's true. But that doesn't mean there's so many things I want to say about this, Antonio. But the main thing is, I'm a stock picker. I never put my money into the indices. And if you look at our published report cards, I typically beat the indices because of that reason. I try to find the better companies. And I say this all the time on Twitter. People complaining, about the stocks not. I'm like, well, the better stocks have responded. And what I mean by better, well, if I can advertise myself a little bit, but that's what I do in my services, and I won't hit anybody hard. But I just put out a tweet today, which I encourage everybody to look at. We have a service called My Take. It's not terribly expensive, and we evaluate hundreds, actually almost 1,000 companies right now, and they get a very clear thumbs up or a thumbs down. And of the 300 or 400 gold stocks we've evaluated, the thumbs ups, I don't have the number in front of me because I'm looking at you, but the thumbs ups have averaged up around 36%, something like that, year to date. The thumbs downs are up by less than 2% year to date. So that's what I mean by stock picking. Now, I don't claim to be the best in the world. I don't get everything right, but clearly there's a difference between the thumbs ups and the thumbs downs in My Take. And if your gold stocks are not performing, if gold hits a nominal all-time high and your dog don't bark, you need to ask yourself something about how much life that dog has left in it. And you need to look in the mirror and ask yourself if you made a mistake. Like Doug Casey says, these junior mining stocks, they're not family heirlooms. They're burning matches, right? You get burned if you hold them too long. You cannot fall in love with them. If they're not working, you need to look for the ones that are. And there are plenty out there that are. And not even just the ones I own. I'm not even just saying, oh, buy my stocks. I mean, we cover many of, I don't remember how many, it's more than 100, I think, have a thumbs up in the My Take that I don't own that many. But just simply exercising some judgment, doing some due diligence, avoiding the obvious crap, that's a technical term, and going with the better bets does make a difference. And you can beat the indices.
But you say on here, 293 stocks got a thumbs down and 48 stocks got a thumbs up.
Right.
And those have basically doubled the performance. Though they've done more than double the performance of GDXJ and GDX, almost doubled the Huey Gold Bug Index. So that's what 350 stocks basically that there's on there. I thought you covered like 600 stocks or something along those lines.
Well, that's just the gold stocks.
Oh, that's right. Yeah.
So, by the way, we did a number like this for uranium last year when we were talking, when uranium went like that. And I don't remember the numbers off the top of my head, but the thumbs up were roughly double the thumbs down in the uranium space. In this case, with the thumbs down being less than 2%, it's like 60x difference between thumbs up and thumbs down. I'm not promising 60x returns. That's not what I'm saying. What I'm saying is, if I dislocate my shoulder, patting myself on the back, I do think I know something about picking stocks. But the more important takeaway for the audience is, this is a stock picker's market. This rising tide has not lifted all ships equally. Maybe if gold goes to 3,000, it will, but maybe it won't. So, why buy crap when you can put a little bit of effort into at least trying to sort out the most obvious and smelly crap? And sorry, if you've got crap in your portfolio, sell it, move on. Something that's down 90%, from $1 to a dime can still go from a dime to a penny. And maybe that dime will do better somewhere else.
I've literally been trying to get you to slip and give me a couple of names for years now. You have not slipped. Maybe I'll keep trying over the coming years. But is there a topic among them? Like, is it, because you say it's a stock picker's market, but is there a topic within stock picking, like the PPSS or something else that you're specifically focusing right now, given the M&A scenarios that are happening, but also given the margins that we're seeing from the producers and everything? Like, it's a very specific time in the market combined with the macro, right? So I suppose there would be a specific subsegment of the market too that you'd focus on, no?
Sure, and you've named them. I always like PPSS plays, even in a bear market. a PPSS play can work out. And in a bear market, I might be able to get in cheap. So I like the pre-production sweet spot. I also like what I call success in progress. Both of those you can search for on our website and find free reports. And the idea of the success in progress play is that the first part of the Lassonde curve, that spike up on discovery, that's not something that happens in a day. It's not one drill hole gives you a 10 bagger. Sometimes a drill hole can give you a 50% or 100% gain on a really exciting drill hole. But from nothing to a deposit, takes years usually. And that success in progress, when you really have something of merit after the discovery, is much less risky than before, because you never know who's going to make a discovery. Not even Rick Rule, not even Doug Casey, not even Lobo Tiggre knows who's going to make a discovery. But once one's been made and you're on that, and you've got predictability in drill results, you're on your way to seeing how big it is and how valuable it might be. There's money to be made there, good money to be made with less risk. So I like that a lot. Takeover targets are definitely something I look for. But actually, I don't think I've ever bought no, that's not right. I almost never buy a stock just because I think it's going to get taken over. If I like the story, if I see growth or I see success in progress or something else, and I think it's got takeover potential, that one exception that came to mind is I bought Corvus Gold before it got takeover, very specifically as a takeover. I had questions about its assets, but at the time they had a strip of land, like literally 100 meters wide between Core and Anglo. Like these two big companies had this little strip of land between them. And it was this worthless thing. It was like, there was nothing there. There was no drilling there. There was nothing there. It's just this piece of land between the claims that Corvus had. And so, they're trying to advance their other deposits, Mother Lode and Bullfrog, North Bullfrog. They had multi-million ounce deposits elsewhere, and they weren't getting far with them. So they said, what the heck? And they drilled Linda Strip, and they hit. Like, it wasn't a spectacular hole, but it was like 100 meters of 0.89 grams per ton gold, like a significant bulk grade intercept. And it's like, what are you going to do with that? You can't mine 100 meters, like you can't. But at that point, the light went off in my head, like, holy cow, if they find something there, the neighbors are going to have to take interest. And so immediately the company starts drilling. Like, what can they do? They only had this 100 meters strip. So they start drilling sideways from it. And, what are the odds? But they start hitting, not every hole, but they start hitting, boom, boom, boom. They start hitting, some of them were, 50 meters of 0.3 less. Some of them were more, over a gram per ton. But there was obviously something there. And so that's when that became, like intolerable to the neighbors, plus the multi-million dollar deposits they already had elsewhere. And so when the neighbors started drilling, like there's a fantastic photograph that Corvus published back in the day. It's like a drone photograph. It shows, their drill rig on Linda Strip, and it shows the neighbors with like half a dozen drill rigs on either side, like two different majors. And so, nothing is certain in resource speculation, but that was a screaming takeover story. And that's exactly what happened. And I don't remember what, it's on my public track record. At the bottom of every one of our web pages is a link to our track record. Corvus Gold is on there. It wasn't a 10 bagger, but it was a nice win.
That's actually a topic we should do in depth to follow up on our thesis of stocks that you like. Takeover targets is on my list of things to talk to you about. Maybe we should just do it a very long form, like a 2.5 hour. I know you don't have a problem doing those. So,
well, but actually to answer your initial question and maybe to toot your horn a little bit, the longer interviews we've done recently on the Lassonde curve cover my favorite areas to speculate on. So your question now is, okay, you're stock picking, if you're not going to give me a name, what kinds of stocks are you stock picking? Well, an answer would be, go look at those interviews that I did with Antonio, where he went into depth about my favorite, kinds of speculations. That's where I'm focused now. And, I think you probably get, more than an eye full of answer there.
It's true. I'll try to link to that whole playlist because there's a lot of nuggets in there on everything, really, from the PPSS to many other stuff. I think we done like 4 or 5 of those episodes. We should keep doing those. But one last thing that to that PPSS and going more towards that right-hand side of the Lassonde curve, do you think that the mine failures that we've seen some of, luckily not a lot, but we've seen some, shortly after each other. Do you think that could change the landscape of that right hand side of the Lassonde curve at all?
That would be interesting. If it did, for me, it would be for the better, because, I kind of let the cat out of the bag by publishing my original research on the PPSS, the golden runway, right? And so now everybody can do it, right? It's not my secret sauce. But if it became more difficult and to peg, who's doing it right, then that would actually help an expert to, do better than the ordinary bear there in that. Though I'm a wolf, not a bear, really. I try to be an opportunistic hunter in a bull or bear market. But yeah, no, that's an interesting idea, Antonio. I will watch for that, because it could be interesting. But let me actually talk about mine disasters. I mean, the latest mine disasters, even the SSR one, which included fatalities in Turkey, was nothing compared to the Vale disaster in Brazil, where these dams, like liquid dams, burst and wipe out whole villages and things like that. Like, this is really bad. As we speak, we're on the 10-year anniversary of the Mount Polley mine disaster in BC. And that was a much bigger deal than the Victoria kerfuffle right now in the Yukon. And guess what? They're still mining in BC. And in the ministry itself, issued a statement talking about how much better mining is now, how they responded, learned from that event, and have made mining better and safer now. And so, sure, bad things happen. And mining has always been a dangerous business, but you can't not have it. Mining is literally the difference on a civilizational level between the Stone Age and everything that came afterwards, right? So if you don't want to live in the Stone Age and bang rocks and have no teeth by the time you're 30, right, you've got to have mining. So there is no and despite some of the green cheerleaders out there, no, you cannot recycle more copper into existence. You can't recycle more iron or lithium or anything into existence. You have to mine this stuff. If you want real stuff in the world, you don't grow it, you've got to mine it. So I'm not trying to say that, too bad, shit happens. I'm just saying that mining's not going to stop. We will learn from our mistakes. We always do. We'll do a better job. And the people who do it right, the world needs the output of our mines, and the people who do it right will be paid for doing it. And their investors should be rewarded accordingly.
Why I'm even bringing this up is because I've been thinking about financing conditions, which have been tough in the public markets. But I'm thinking, are they going to get tough with financiers as well, like with providers of capital? Are they going to start wanting more because we're getting more mine
No,
fees?
I understand the question. Yeah, you would think that the due diligence level should ramp up, but there's all kinds of the dregs get financed anyway. I see even highly reputable shops, your Francos and your Wheatons and so on, will do streaming deals with companies that I don't think have a prayer of ever becoming a mine. And I wonder about their due diligence. And I'm not throwing those companies under the bus. I'm just mentioning the top players in the field. Like, what are they thinking? I just don't see it. Maybe they know more than I do or whatever, but I've been to some of these places. I've seen the villagers hanging the CEO in effigy and stuff. I mean, it's just not a good thing, right? So due diligence is always fraught with risk. I don't really see it changing. And this whole business with, it's been tough to get financed. Well, that's actually another litmus test. I don't buy that at all. When it's tough to get financed, Rick Rule is sitting there with a grin on his face and a checkbook in his pocket, and he'll finance you. You have to, give him your left arm and maybe your firstborn, but he'll finance you. So it's not a question of, there's no money there. It's a question of how good your project is. If you've got a great project, you can finance it. The money is there. And if you can't finance your project, word to the wise investors out there, if your darling company cannot finance their exploration efforts, then that's telling you something about the quality of those assets.
Of course. Yeah. Right. Well, that's actually a topic in and of itself worth at least a whole podcast, a couple of hours. We should spend a couple of hours talking about this. And I will follow up with you on this, but I have someone else waiting for me to jump to, Lobo. So I'll let you do your thing now. It's independentspeculator.com for people listening, or due diligence guy on Twitter. And people who want to read more from Lobo, go and follow him on Twitter, go to his website. And in the meantime, I'm moving to my favorite part of Real Money Talks episodes, and that being the CEO barbecue, of course. And more specifically, the disclaimer here. There's a warning on your screen right now that you're obligated to read, but you're also just advised to do so. And that's going to be the last piece of advice that you get in here, or the first and the last one, really. Because this is not just some disclaimer, okay? I always say this. People think it's a joke. It's not a joke. This is an actual warning that will help you not lose money. It's not easy to not lose money, okay? And I mean, I am part of it too. Like, take this for me. I'm here to make money. I make money from the existence of this channel, specifically from companies paying me to produce these interviews. They pay for the time that it takes me to research the companies, do the interview, edit it, put it out on YouTube, follow up with it, share some content, so on and so forth. So, but I would like you to be aware of that fact. So some of these companies that you're going to see on this channel, they pay for the production of their interviews. And in this episode specifically, it is Terra Resource Corp that is a paying advertiser on this channel. Okay, they pay me for my time to produce these interviews. They see it as advertising, though. But even the companies that are not paying, they are still probably seeing their participation in this program as marketing or as advertising. They think, oh, we can go on there, it's free, we can do some marketing, right? So start by understanding that most company communication is online, whatever it might be. It could be interviews, it could be presentations, it could be their Twitter accounts, LinkedIn, you talking to their IR guy, all of it, or gal, of course, all of it. You hear someone making a recommendation, this is the next best thing, you should buy this stock now. All of that is marketing. And although I don't make those recommendations, I don't make any buy or sell recommendations, because there's a clear conflict of interest, in my opinion, when you're taking money for the production of these interviews and then you turn around and say, oh, this is my opinion, the best company out there. Well, duh. But many out there do, unfortunately. And so you should be aware of that inherent bias to the internet as a whole, not only this channel obviously included, but the internet as a whole. That won't always be clearly disclosed, by the way, with everyone out there either. So I think it's just safer for you, as I say it all the time, and it is safer for you, really, anytime you're watching or consuming any type of company specific content. As I said, it could even be the company's own presentation. Just approach it with a dose of skepticism. Just treat everything that the company is putting out there, or other people are putting out there about whatever company, just treat everything as marketing and take it with a grain of salt, because marketing will always show you, well, most of the times it's going to show you the beautiful side of the story. And although I try to be different than other interview providers or whatever, by looking into more than just the front page of the company's website, which is unfortunately what people typically only look at. And although I will try to ask the real questions, the questions that need to be asked, and not the questions the companies like answering, although that's the case, and although I don't give the companies the questions up front, there are no questions off the table. The companies get no editing rights, and they get no say in what ends up in the final video. Even though that is, or maybe the case with me, these things should still be looked at as advertisement. That is the hard-coded reality. And not as this is not research. Don't treat this as part of your research. This is not research. And least of all, it's recommendations. Okay. Unfortunately, I'm not a sidekick. I'm not a magician. I'm not even a musician, although I'm trying to become one. But I don't possess any superior knowledge about what will go up, what will go down, or what's going to go in circles. Nobody does. I don't care if it's Jimmy Buffett or Warren Buffett, to quote one of my favorite actors. So no guarantees are going to be made here. Besides, this is the only guarantee that I'm going to make here, is that there will be forward-looking statements in these conversations. The conversations that you're about to hear are general and impersonal in nature, and they're going to contain hopes and dreams for future events that may or may not take place, depending on many factors, some of which are not clearly visible if you don't go to setterplus.ca and read all the official company's filings. Be aware of that. Be aware of the inherent risk to investing. Be aware of the inherent bias to all the parties, and the increased risk of investing in the mining industry, especially through illiquid investment products, which most junior stocks are. And also, please talk to a professional investment advisor, as well as do more research before taking any decisions. Again, setterplus.ca. It's an official government website where you'll find the official company filings. And that is the information you need to depend on after, of course, having talked to or having spoken to an investment advisor. There are disclaimers on your screen right now. There's a couple of ones that have went by. You need to pause, read all of them. If you don't enjoy losing money, read them and be careful out there. That's it. With all that said, I'm going to shut up now and I'll kick off. Well, not now. It's at least 5 or 6 more minutes that you're going to have to listen to me, because I'm going to kick off the CEO interviews by revisiting Yellowknife. Yellowknife is in northern Canada because who even likes summer, right? Northern Canada, though, and again, specifically the city of Yellowknife, because I'll be hearing about the completion of a master hole, a very deep hole, done by Gold Terra Resources, once again, a paying client of Resource Talks, and I'm going to hear about it from its CEO, Gérald Penneton. The company is listed as YGT on the TSX Ventures Exchange in Canada, where an average of about 110,000 shares trade each day, with a 52-week high of 11 cents and a 52-week low of about 4 cents. With a market cap of roughly $21.5 million and about 330 million shares outstanding, today this is a 6.5 cent stock. There are no warrants, and with about 10 million options, we're left with a number of fully diluted shares that is equal to about 340 million. Gérald himself owns about 2% of the company now, after a recent streak of insider purchases, a bit more probably, which I hope to discuss later on. But there are other famous names on the registry that you would recognize, including Mr. Eric Sprott, Uncle Sprott, as I like calling him. Himself, he owns over 6%. Newmont owns over 2% of the company, and there are various institutions who own over 15% of the company combined as well. The last financial statement, which is dated March 31st, shows me a little under $1 million in current assets, most of which at the time, it was $500,000 to be specific, was in cash and cash equivalents, with some prepaid expenses and some marketable securities on top of that as well. Although, as I just mentioned, at the time, this was March 31st, so it's worth noting that Gold Terra did close a $2.5 million non-flow through, so hard dollars financing with Eric Sprott as the lead, no warrants. And that also happened right after the publication of this report. So the financial situation will have changed. I don't see any major long-term debt, but I do see about $1 million in account payables and accrued liabilities. That is also something we can talk about later on. But that same financial statement from March tells me that on average, over the last reported 3 months, Gold Terra recorded about $100,000 a month in administrative expenses, mostly in the form of management compensation, professional fees, and salaries, excluding share-based compensation, that is, which, by the way, this is a significant drop from last year's first quarter, which saw administrative expenses of up to $150,000 a month on average. As to exploration and evaluation, a total of $250,000 was spent on the asset over that period per month on average, again, mainly focused on the con mine option and mainly in the form of assays and drilling. So money is going into the ground. And in terms of ratios, that actually means that about 70% of the total cash burn went into drilling and assays, and 30% went into administration and administrative expenses. As it always is, though, I'd like to remind you that this financial statement is nothing more than a snapshot in time. In this case, it was specifically at the end of March of this year, and it discusses the first 3 months of this fiscal year. But again, the finances will have changed by the time you're watching this, partly because this is a non-revenue generating company that just did the financing, but also because there are periods of in between exploration and whatnot. So please head over to the company's website as well as setterplus.ca to look at all the numbers yourself and make sure you're getting the full picture. That all said, Gérald and I have done many interviews over the last couple of months, so I'm not doing a full company overview here, but rather just maybe give you the basics very briefly. This is a large gold exploration story. It's on the shores of the Great Slave Lake in Canada, with Gold Terra holding almost 1,000 square kilometers, was 918 square kilometers of land surrounding that city of Yellowknife that I told you about earlier, with the idea of extending and expanding the Campbell Shear, which, by the way, is a gold-rich structure that produced about 14 million ounces of gold historically. And they are doing that by drilling, again, very deep holes, or at least one of which, and the main one of which, really, the one they call the master hole, has now been completed. It's drilled to a depth of just over 3,000 meters, so it is deep, and that will be used for wedge holes to further expand the exploration program. And this may be a good point to kick off the discussion here, Gérald, because in that master hole you've drilled here, again, I understand it's to be used for wedge holes, but so you've encountered multiple zones of deformation and mineralization as well in that hole, with what you called significant gold intersections near the con shear itself. And so knowing that, what's that telling you for kind of the long-term thesis that you have for this project? Are you happy with how this hole has turned out? And what do you now know more about the geology than what you knew before?
Thank you very much, Antonio. And for those listener and viewer of this podcast or interview, please refer to our website. I mean, usually we update our presentation, especially soon after a press release, like the deep hole. And so you can have a good peek. It's a very short presentation. It's just about 20 pages and summarize basically what we've done so far. And I think one of the things that we firmly believe with the deep hole is that it's a platform. It's yes, I mean the result is always like we wanted to hit the Campbell shear in that master hole. There's no question. The target was to, and we made a decision at some point in the hole not to wedge it, to keep it clean, to keep it, because every time you wedge a hole, especially at the beginning, you kind of mortgage the hole. Every time you try to alter the master hole, you basically will have you could have some issue with the hole. And that's what happened in hole 55 last year. We mortgaged it too much at the top and through the hole, and eventually we had to abandon it, and we could not use it anymore. So when we decided to do hole 56, we did it a bit steeper, but it stays steeper. So we basically did not intersected the Campbell shear where we were supposed, because of the drill hole was like, we started at 82 and we finished at 85. So we missed the Campbell shear. You can say that, we missed it. Can we hit it further down? Yes. But are we willing to pay, I don't know, another, big amount of money to get it at 3,400 meters? No, we're not. And it's very simple. When would you be mining at 3,000 meters? 20 years from now? So what's the point? Very simple. It's just like, the reason the target is at 2,600 meters, and this is our target, and that's the next wedge. The next wedge will be targeting the Campbell shear at 2,600 meters, which means that everything below 2,600 meters will not be able to be achieved eventually with the same hole. But from the 2,600 meters all the way to 1,900 meters, which is the depth of the shaft, this is the window that we're going to fill in with wedges. I hope this helped.
It does help to kind of put it into perspective as to what exactly you want to be doing there. But so essentially, with the wedge holes that you're going to be drilling, do you still have to hit the con shear in order to build that resource to a place where you want it to be? Last time you told me that you want to have at least 2 million ounces so that you can have an actual mine there. So do you have to hit it?
The Campbell shear, you have to realize that next winter, and hopefully with better market and better financing, we'll be able to go back near surface where we can probably take our 540,000 ounces resource near surface, between surface and say 600-700 meters vertical. We can take it to maybe 3/4, maybe 1 million ounces. But this was not enough to satisfy one of the minimum requirement of the Newmont agreement. Newmont was willing to, pass along the liability and the sale of the coal mine as long as we find enough ounces to support the development of a new mine. And we all agreed during the negotiation to find at least 1.5 million ounces. There's already 600,000 ounces left on the mine, but we wanted to use this as a bonus. We don't want to be like a skinny project that is borderline. I want to find enough ounces. And that's why I talk about 2 million ounces, because your 2 million ounces eventually goes down to 1.5. You may have a resource, but once you put all the mine plan and everything else, you could have down to 1.5. So 1.5 plus 600, that's 2 million ounces. And we want to be able to ramp down from the bottom of the shaft. We don't want to sink the shaft deeper. That 600,000 ounces, say we have a surface, give you the first 5-6 years of operation, while you keep dewatering, you keep infilling the. So you're looking, when you look at the deep part of the mine, you're looking at year 6 to 15. While the first part of the mine is year 1 to 5 or year 1 to 6 in your mine schedule. So this is, of course, it's not detailed like in a feasibility study, but at least it gives you the bone structure of what we're trying to do as an objective. There's no question in my mind, this window can generate more than 1 million ounces because the deposit itself has approximately a million ounces every 200 meters vertical. So if you target 3 million ounces, you could have up to 3 million ounces over 1 kilometers of strike length between the shaft and 2,600 meters.
What I'm thinking here is whether this recent drilling changed anything in your understanding of the geology. For example, you also highlighted breccia zones, which the high grade is associated with. So how are you reading the structural controls on that high grade that's associated with the breccias? Like, has anything changed now that you've completed this deep hole?
The deep hole is kind of a bit of a frustration to some extent. It's a great platform. It's intact. It's in great shape. You look at the Campbell shear that dips 60 to 65 degrees to the west. Your deep hole comes like this. So you get teaser. You're very close to it, but you're not crossing. When you want to learn about geology and achieve, like if you ask me, there's 2 myths in that hole. We didn't intersect the Campbell shear, and we were not at a good angle to cross it. And that's why the next step is a wedge. The wedge at targeting 2,600 meters vertical should achieve and cross the Campbell shear. The Campbell shear, don't forget, the Campbell shear is the mother lode of Yellowknife. 14 million ounces between 15 to 22 grams gold. When you look at this, you're looking at high-grade mineralization. You're looking at a structure that is 70 kilometers strike length. That's why we control 900 square kilometers in the camp. That's why the Campbell shear keeps going north of the Giant Mine and south of the Con Mine. That's why we own land to the south and to the north. But to me, the prize and the most important thing about the Con Mine that people don't realize, they said, why are you drilling? Why are you focusing on the Con Mine more than your target to the north or to the south? The Con Mine is kind of a shortened permit process. People, when they discover a deposit in the middle of nowhere and they have to permit everything, it can be 5 to 7 years or 5 to 10 years to permit a new project in a new area. I draw a parallel between Con Mine and Detour Lake Mine. If everybody knows the Detour story, nobody knows it better than I do because I founded the company. Why did I was able to start a company from IPO to gold pour in 6 years, including 2 years or 26 months of construction? How do you do that? That means I took a production decision after less than 4 years, following our feasibility study because of the permitting process. We had the Detour Lake mining lease. What do you think the Con Mine is? It's got a mining lease. It's got disturbed already mining footprint under a mining lease where I don't have to negotiate crown land. So we just have to reapply for different activity from closure to mining, which will generate also many jobs at the same time without disturbing anything in the environment. And proving up again that when you build a mine properly, you don't have issue. And so we're not going into the middle of nowhere. We have the Con Mine, and the Con Mine the Con Mine also has more than $100 million of infrastructure in place. I could name it one after the other one. Go in the presentation, look at the slide. You have a warehouse, you have electricity, road, a pond, a water treatment plant. How much do you think it costs to do all of this today? The value of the Con Mine is more than $100 million, no question, in US dollar, not even Canadian. So you have 2 big advantages with the Con Mine. You have infrastructures in place. You also have a huge potential, but you're also in town. Everybody goes home at night, and you have a shortened period of permitting.
Has your timeline or your expectation for the timeline changed recently? What do you think a realistic timeline is for you to get this from where we are now, a little over 500,000 ounces, to it being 2 million ounces or even more, and then eventually being into production? What do you think those steps are?
The timeline is very, very important into any project. And you look at my 4 years at Gold Terra, it's been terrible because it's very hard to advance a project with the money. So when you talk about timeline, it's subject to financing, subject to the price of the stock, subject to the market. We got a great gold price, $2,400 an ounce. The average producer, senior producer, are discounted 20%. The average junior explorer is discounted 90 to 95%. Our valuation is less than $10 US an ounce. So we don't have a market to support any aggressive, sustainable timeline. So let's forget about the money, and let's say I have all the money. I think I could be in a production decision within 3 years.
So 3 years,
or even maybe 2 years, maybe 2 years, enough to have a production decision.
Well, but you say let's forget the money, and that's not easy to do, especially in this market. So what about in this specific market? Like, is there a place where you say, oh, let's put it on hold for a while because the market's not giving me any value. Like, I'm putting money in the ground and the money is disappearing because it's not translating into market cap. So in this market, what's a realistic timeline?
I still believe that 2 to 3 years is still achievable. It's just a focus. I cannot drill all the targets we have. For example, in winter 2022, 2 years ago, we intersected 33 grams over 3 meters right at surface into a new zone that was drilled properly for the first time in many, many years using the winter ice road. So we discovered that zone, and it's never been followed. It's probably not 1 million ounces deposit, but maybe it's 500,000 ounces at 1 ounce per ton. So these are the kind of thing that we could add to the value of our company as custom milling, as satellite deposit, that are tremendous. And we're not building a huge project. We're not building a 50,000 ton per day or 35,000 ton per day like those low grade deposits. We focus on high grade. Why? Because high grade is a smaller process plant, 2,000 ton per day maybe, with potential to expand if you find more. The coal mine only can deliver 1,000 ton per day. So we know that 1,000 ton per day is good, but with our satellite deposit, we could build a mill of 2,000 ton per day and produce 150,000 ounces a year. So this is a great, nice little profile.
Right.
And so when you look at our strategy of moving forward, and despite a difficult market, like you said, I could park away. If I park away, what do you think Newmont's going to do? It's going to go and sell that means I'm basically getting out of the coal mine option deal, and then they're going to go and put it for sale to somebody else.
Well, but you did tell me that you wanted to renegotiate the deal. Is that still your plan? And when do you think you're gonna?
Yeah. Stay tuned. That's all I can say.
Okay.
Stay tuned. It's work in progress.
So no timeline. Like there's not something you can tell me. Like by the end of the year, I have a new deal, or like you're talking, but there's not much you can say.
By the end of this year, we would have. Look, Newmont asked me to wait 2 years to negotiate the extension, I should say, and then so I initiated in early 2024, and I think Newmont. Look, we spent more than $11 million so far on the project. We've been active on their project. We've been, the ounces that we have at surface, some of them we don't even need to go back to drill them. There's a 325,000 deposit lenses in one spot at probably around 10 grams. And then this doesn't need to be redrilled from surface. The next step is to drive a ramp and almost go into mining or sampling. So it's almost like post-feasibility study status. The drilling is good enough. The continuity is good. The grade is there. We have metallurgy. We recover 92%. So, we've done our homework like a professional producer, gold producer.
What's you say the next steps are those, but what the immediate next steps really are the wedges. And last time we spoke, you also told me that there's no break in between drilling the deep hole and starting the wedges. What is the plan there? I know you have the money to start doing the wedges, but when do you want to start them? How exactly do you start them? Talk to me about the specifics.
The specifics were twofold. The deep hole cost us more money than we planned. So you basically, by doing a hole that was 300 meters longer, because it was steeper, we basically burned some of our cash to do the first wedge. Right? So we decided to take a break and then work on a couple of things that we're doing in August. And you should hear back that the drill will start again in September.
Okay. So you're starting.
But we needed, the guys have been on this hole from February, mid-February, all the way to the end of July. And people don't realize that, but even on the driller side, this is not fun to, it's challenging. And one of the reasons I didn't tell you is that, for example, why did we stop at 3,000 meters and not go to 2,100? Maybe you would have hit it, or 3,200. It's very simple. The drillers and the rods, or the technical aspect of the drill, was falling all onto my lap past 3,000 meters, meaning that the drillers will not take any responsibility for any hiccup. I will bear 100% of the responsibility of any hiccup past 3,000 meters. So decided to stop at 3,000 meters. It was just a common sense decision. And like I said, I explained to you, I wish I would have hit the Timberlake at 2,900 meters and get out at 3,000 meters and have a great intersection at depth, and I could use it in my geological model for information, right? But we didn't. But was I smart to continue or to stop? The smartest decision was to stop, because I didn't want to wear and bear 100% of the responsibility of the whole past 3,000 meters.
Yeah.
That means it could have cost me, instead of costing me, say, $500-$600 a meters, it would have cost me $1,200, $1,400, $1,500 a meters. Because anything happen at depth was my responsibility.
The wedge holes now, though, are going to be cheaper, right?
Well, you set up the wedge. You have to set up a few more because the hole is already steep. And so each wedge will cost somewhere between $400,000 to $600,000. On average, you can expect a wedge will cost $500,000 each, roughly.
Right. Okay. How much money are you? Because you said it cost you more. How much money do you have in treasury right now?
Just under $1 million.
Okay. So
have you ever tried to raise money in July and August?
I've never tried raising money in my life. I'm lucky that way.
So I don't know this is a time where it's very difficult. It started in September. Does that mean I don't?
Even though I'm not raising money, I still have people who just don't show up to an interview. Getting back to my emails, people don't respond to my emails as quickly as they typically do. Some don't respond at all. So it is definitely a slower period right now. It doesn't seem like.
Oh, yeah. It's not just the company itself. It's also all the investors. The investor just basically, go away in the summer, and they reappear after Labor Day in the Americas. And as much as you would like to contact people, you also have kind of like, people, you don't bother people in the summer most of the time. Does that mean I'm not working on planning the fall? No, I'm actively planning the fall as usual.
How then do you deal with it? I mean, even when the summer is over, we're still in a challenging market. Even if it was the winter right now, the market is still challenging. And I mean, I'm just wondering, what are investors biting on, if you want, like in this environment? I mean, you've been buying in the open market yourself, but not many others have been. And Gold Terra, again, is no exception, where you have the grade. you have the potential for the ounces, but you don't necessarily have investors' love and attention right now. So what do investors really want here? And what kind of a pitch
Oh,
do you
they
go to them with?
look, everybody who put money in the company in April when we did the last deal was hoping to see the Campbell share in the depot. And I was in the same, I wanted to as well. And we did not touch the hole because we wanted to keep it intact. You see, the first wedge was put by Foraco at 2,600 meters because of their own fault. So it was not at our cost. But we lost a couple of weeks when they did that because they had to basically the rod got stuck, and that was their responsibility. So for 2 weeks, I didn't have an invoice, right? It's all at their cost. They had to set up a wedge. So the first wedge was done at 2,600 meters. So you can say that from 2,000 to 2,500 meters, I can put a wedge. And then you start always at the problem with wedges is that you have to start the deepest one first, because as you move up, you can target. So the first target is 26. After that is 25, 24, 23, 22, 21, 2,000. And you do also some lateral if you can. So you could do roughly somewhere between 15 to 20 wedges. And are we going to do that many? I don't know. It's the whole is still your platform. There's no question in this market that, it's too early to say anything about the support of our investors. First of all, you have to be disclosing publicly that your master is completed. And then you start talking with your investor in the month of August and September. And then you'll see the reaction. Look, you look at yesterday, the market got a tumble because Asian markets, especially Japan, decided to unload all the company that they borrow money on because they have to pay. You saw the effect. The effect was not in the US or in Canada or in Europe. It came from Asia overnight. So markets are market. You adapt to market, you adapt to the shortage of money. And to go back, do you not stop completely and wait and wait? Well, if you wait and wait, you may lose your land as well.
But do you think you're going to have to wait until you have results back from the first wedge before you can raise capital, or is it going to have to happen before?
I don't know. I'll see the reaction of my investor and the support I get from them, and we'll go from there.
Okay. And are you?
Don't you worry. I work on different optionality all the time. I don't look at only one option.
That's an interesting point. What do you mean by that? Do you mean, are you talking about the other projects? Or are you talking about a JV? What exactly do you mean by different optionality?
I don't think I would ever be inclined to do a JV because you lose a huge chunk of your property. But there are other avenues to, there's strategic investors or strategic alliance. There's different ways. There's also, it could be one person that is not an investor that becomes an investor and take a big private chunk in it. So there's all kinds of things that are always possible.
You have I'm asking that question like that, Gerald, is because you have your opinions. You definitely have your ways. Whereas like previously you've told me you don't want to do warrants. You're against warrants. You don't like flow through financing. You don't want to get a JV with anyone. And so you're limiting your
limiting
options.
my option.
Yeah.
Yes, I am. Because we want to stay a pure play that, think about it, even with 330 million shares, say the worst come true, I get to 400 million share at some point within the next couple of years. And it's very difficult to raise money at these levels. So you have to work on optionality of bringing new blood. And every time you do a financing, it's almost the same thing. You cannot ask the money. But some of the shareholders, they know the value of this project. You were talking about some of our institutional. One institutional started the project and helped me in 2021. Okay. Because I was drilling the Campbell share.
Okay.
And he took a big chunk in 2021 at, say, 26 cents a share. Okay. And my average, for example, of 7.5 million shares is 26 cents. So I'm in there for a long term. But this guy also, and every financing, he was there to participate and maintain his 7% position. He did not miss any financing. He's not there as a lead order anymore. That's why my job is always to find a lead order. And the moment you find a lead order, it's always easier.
Well, you just did with the previous financing, $2.5 million, no warrants, hard money, so non-flow through. You have a lead order from Eric Sprott. Eric's known to like high grade. You keep having the high grade and the optionality for more high grade. Do you think you're going to keep getting him as a lead order? Like, what do you guys' conversations look like?
I don't know. I had to put the press release last week first before I initiate a conversation with Eric. It's a lot more transparent that everybody knows where we are.
True. Yeah. I like that about it as well.
And the main reason, just to complete, Eric loves high grade. There's no question. And Eric is a big supporter. Like you mentioned, Uncle Eric has been amazing for exploration for many, many companies. And it's amazing the support he's giving to the junior world and the junior explorer, because but the valuation also are crazy stupid. I mean, when I bought Detour, I had a fairness opinion because I was buying it from a public company, Pelangio, back in 2006. And during our negotiation in the summer of 2006, I paid $50 an ounce for indicated resources, and I paid $75 million for Detour Lake. People forget about that. I had to pay $75 million for this project. Today, you could buy, Gold Terra for less than $25 million with better ounces and, right in town and high grade. Come on. There's a complete disconnect between what we had in 2005, 2006, which is almost 20 years ago. In 20 years, everything went up and double or triple, but the value of every ounces in the ground went down like this for every junior, which are discounted 90%. It's crazy.
Well, it goes back to the previous question that I asked. Like, well, what do investors want to see from you? What do they want to be sold on, and when would they want to
be valuation? You're buying into a project at $10 an ounce. You're buying into, so say we achieve in 2 years our 2 million ounces on the Con mine. And the moment you have the critical mass that supports developing a project, your ounces goes from $10 to say $100 an ounce, because you've de-risked the project. So you could have a 10 bagger, right? So you're 2 million ounces worth $200 million, and your 400 million share are worth somewhere between 50 cents to $1.
Yeah. And it goes back to the valuation. Exactly.
Valuation are terrible for everybody in this market.
Yep.
Think about the senior producer. What does it tell you that the senior producer are 20% discounted to the gold price? What does that tell you? That nobody's investing in the gold sector, or people find the sector risky and don't know what the ESI is. Look at Newmont, second quarter, 1562. It went from 1400 to 1562. That's a 10% increase over a year in terms of cost. Whatever the reason is, sometimes it's just the production is not big enough to reduce those ounces, or sometimes the cost just went up. Post-pandemic, the world is suffering.
Yeah, it still is, especially what's going on, and all the earnings reports from the big miners are not looking as good as I would like them to look at 2,500 gold, right? And so that's also a potential challenge there for the smaller guys down the line as well. But Gerald, I know you have to go here in a couple of minutes. So just before we move on, when I was asking about JVs, I was not only talking about the Yellowknife project, but I'm also thinking about the Mulligan project. I know that's free of everything now. I mean, is it open? Is it for sale? Are you looking for a partner? What does that look like?
We've been open on Mulligan for the last 6 months, and we've received interest. We have a very, very small program ongoing in the summer for stripping and some of the new zone that we discovered with our geochem. So we've been moving our Mulligan project at the rate of $50,000 to $100,000 a year, and we get a grant every year. For example, this year we have a $40,000 grant given to us by New Brunswick. So we're spending 80 and getting 40 back.
Good.
So it's hard to remain inactive if you can do a lot of good work to promote your project. And I think a couple of companies in the area are interested, and we are open. There's no question, because it's not a core property, but it's a valuable small asset.
Yeah. I see it valuable as from a financing perspective. Like I would like to see some money come in that's related to that project. So as you said, you're open on it. So it'll be good to see what kind of options come out from there. What do you think, just to recap here, Gerald, what is the next news release going to be about more specifically, and when are you expecting it?
You cannot read through my mind. I'm sorry. I'm gonna remain silent. Look, we are looking and working really hard to be back on the drill in September, and that's probably the best I can say. But we're working on many different other things that could also generate some good news in the market over the next month or two. So stay tuned.
All right. Well, I'll be following along, Gerald. I always enjoy our conversations. I'll keep bugging you for updates over time, but I know you have to run now, so I'll let you drop off, do your own thing. Thank you so much for doing this, and enjoy the rest of the summer up there as much as possible. But I am not going to try and enjoy any northern summer. I'm just going to go down south and chase after even more heat, but also potentially chase after gold and silver in Arizona specifically, where I'll be getting some help from Mike Stark, the CEO of Arizona Gold and Silver. The company is listed as AZS on the TSX Ventures Exchange in Canada, where an average of about 40,000 shares trade each day, with a 52-week high of 57 cents and a 52-week low of 27 cents. With a market cap of about $23 million today and about 77 million shares outstanding, this is now a 30-cent stock. There are over 13 million warrants and almost 7 million options, leaving the number of fully diluted shares at just under 100 million. The last financial statement, which is dated May 31st, shows me $500,000 in current assets, most of which at the time was, and that's $400,000 to be specific, was in cash and cash equivalents, with some prepaid expenses on top of that. I don't see any long-term debt, and the account payables and accrued liabilities here are also rather low at about $140,000. And part of it is also in relation to, related party transactions, meaning professional fees and management fees and whatnot. That same financial statement from the end of May also tells me that on average, over the last reported 9 months, Arizona Gold and Silver recorded only about $40,000, so $40,000 a month in administrative expenses. So it is rather low, and it was mostly in the form of management, consulting, and professional fees, all of which combined accounted for about 60% of the total administration burn, and marketing came in at about $6,000 per month on average for that 9-month period. So it was less than 15% of the overall G&A, and that's 15, that's 1.5. As to exploration and evaluation, a total of about $95,000 was spent on the assets over that period, per month on average. Again, that is mainly focused on the Philadelphia Group project in Arizona, which actually accounted for over half, so 54% of it, over half to be specific, 54% of it, that money was spent on actual work. So that was being spent on drilling, geophysics, field work, and assays, with less than 25% of the spend on Philadelphia going toward geological consulting. In terms of ratios, everything that I've told you so far means that about 70% of the total cash burn for the company went into the ground. So it was exploration and evaluation on the assets, and about 30% therefore went into administrative expenses. As always, though, I would like to remind listeners that this financial statement is nothing more than a snapshot in time. In this case, it is specifically at the end of May of this year, and it discusses the first 9 months of the fiscal year, which, or the last 9 months actually that were reported, which are not necessarily fully representative of how this company operates and will be operating in the future. And again, the finances will have changed by the time you're watching this, partly because this is a non-revenue generating company, obviously, but partly because they also have to actively keep drilling and operating the company, and they also have to keep financing the company. So please head over to the company's website as well, sitterplus.ca, to look at all the numbers yourself. Make sure you're getting the full picture. That all said, the main point of that picture, main focus of that picture that Mike and I will be focusing on today is Philadelphia. And Philadelphia is located, as I mentioned, weirdly enough, not in Philadelphia. It's actually located in West Central Arizona. Excuse me. That's West Central Arizona. It's very close to the Nevada border. I'm trying to sound smart by knowing where West is. Clearly, I don't. So it's just on the Nevada border. We'll talk about it that way. But so Arizona Gold and Silver controls 100% of this project. This is a historically producing project. It's a high-grade historically producing project specifically, and it currently has at least 3 kilometers of strike length, with only about half of that having been drilled to date. And it is specifically 111 drill holes that have been drilled so far, with the highest grade hole being 72.5 grams of gold over 1.5 meter, with multiple other double-digit intercepts, though again over rather narrow widths. So those are narrow vein, high-grade structures that were drilled. Narrow high-grade does not appear to be the only thing present on this property, though, because about 3 years ago in 2021, Arizona Gold and Silver also drilled over 115 meters of 1.3 grams gold and 5.8 grams silver in that same hole, as well as 103 meters of 1.6 grams gold and 7.6 grams silver, indicating the potential for essentially a large-scale bulk tonnage deposit. Again, potential, though. That also doesn't appear to be all that this property has to offer, because there is a large alteration system to the eastern end of this as well. And now I know it is correct because I actually just read it off the presentation. So I'm not trying to guess what east and west is. But there is also a potential southern extension to the vein system that I told you about earlier, both of which, so the eastern part of the project and the southern extension of the vein system, both of those are undrilled as of yet. Suffice it to say, there is much more going on behind the scenes on this project than what me and my toddler brain can cover in here. So hopefully we'll get to know more about it later on. But this is not the only project in the company's portfolio, although again, as I mentioned earlier, this is where the majority of the money gets spent, or was spent, over the last reported 9 months. But I'm not going to be going in depth on all of those projects in here because, again, kind of reminder, it is your own responsibility to read up on those projects and everything else in the company's most recent MD&A by the time you're watching this, which can always be found on sitterplus.ca. And hopefully we'll touch upon some of these things later on in the conversation. But before we get into that, Mike, obviously, first of all, thank you for being here. But this is your first time on the CEO Barbecue, so obligatory first question: why should I trust you with my money?
Well, you did a great job explaining everything, so thank you, Antonio, for that. One of the easiest things for me to say, and it's always been the truth, is simply that: tell the truth. First of all, management of this company owns significant, over 25% of this company is owned by us, and we've never sold a single share. And that's very, very difficult in anybody's world, but especially in the marketplace. I mean, we've done an incredibly good job with this company, moving it forward with small advances of funding. But at the same time, you mentioned how much goes in the ground. The last figure that we just did on the last drilling, which was 22 holes, we put 91% of the funds in the ground. That is, again, something that we strongly believe in, improving shareholder value as we drill to, again, keep this discovery getting larger and larger. Why trust us? Because we have skin in the game. Why trust us? We put money into this company continuously because we have a belief that this is much bigger than we currently know that it is.
When you talk about skin in the game, that's a concept that I obviously appreciate, but it's also a concept that unfortunately, and I'm not saying you're doing that, but it is unfortunately a concept that is misused, right? Like everyone could say we have skin in the game. Sometimes there's founder shares at play. Sometimes there's all different ways to acquire skin that it's not really expensive to use. So, well, a follow-up question for me would be, how aligned would we be if I were to buy AZ's shares today? Like, how much of your net worth is into this? How important is this investment to you?
Great question. And I'm glad you asked. There was no founder shares in this company other than the shares that we purchased to bring the company into the original IPO. Those were 10-cent shares. Obviously, management bought those as well. But key to note, when we started the company, we did 3 financings without warrants. Why is that? Again, I didn't want massive dilution. That's why we're only 77 million shares out today. 3 financings were done without warrants before we initiated one additional financing later, number 4, and it was done with half a warrant. So again, my recognizing of keeping the structure tight is very important. We also have funds, 2 funds now that are involved in the company. One maintains a 9.9% ownership. The other one is slightly smaller, around 2%. I understand that he might be increasing on that level as well in the next upcoming financing when that happens. But more importantly, we've got about 41% of the company held by family and friends. These are another tremendous shareholders, long-term holders, not buyers and sellers. They just generally hold. They're looking at the big picture. I'm frequently in touch with these people, making sure that they're updated and well informed on how we're doing.
So if we go back to again, how important is it to you and your team? I mean, you don't have to, I suppose, dox yourself or whatever, but if this goes wrong, are you sleeping on the couch? Are you sleeping on the porch? Or where are you sleeping if this goes wrong?
Well, so far we haven't had that issue. And as far as going wrong, the only thing that would possibly be wrong from this point forward is maybe the market crashing terribly. But I don't see that happening either. Gold currently at about $2,400. That's a tremendous value for some of these producing people out there right now. They're making very good money. The asset itself, as we grow it, becomes more and more valuable to those producing and mid-tier producing companies. We're basically now the only deposit in the Northwest Arizona location where we are, Bullhead City, the Oatman District, that has a resource big enough for some of the meaningful areas around us, like the Moss Mine or the Gold Road Mine. Both these mines, you might not have been aware of this, but last week, unfortunately, the Moss Mine declared bankruptcy and protection, excuse me. So there's going to be a new owner of that mine in 1, maybe 2 years from now. I'm not sure when exactly, but that's likely the time frame. And we are the only deposit within a 40-mile radius that has anything of size and significance. So as it stands right now, I like our future for both our shareholders and obviously for the people that are looking at where this is going to go. It will be a development story eventually.
Well, what I'm also thinking is how that even ended up being the case. You owning that much of this, of what you say is prospective ground here, and that might actually be a good question as well. Is why should I trust you now? As in, again, you've been at this for a couple of years now with a couple of hiccups along the way, if you will, and especially on the permitting side, and with quite the volatility in the stock price too. But you're also not the first one to try your hand at this thing with mining. Again, it's a historically producing district, mining dating back to the 1930s, right, on the property. So I guess to refine my question, why now and why you? Like, how did this even end up coming into your hands, and why do you think now is the right time for Arizona Gold and Silver?
Okay. First of all, the person that found this was Greg Hahn, and he was watching this property back in the early 1980s, 1982 to be exact, and made an attempt to acquire it back then and was unsuccessful in the company that he was working for. But he continued to watch, and Meridian is another company that drilled it in the mid-90s. Again, due to the location of the Highway 68, that ran right through the middle of the property, there was no development future. So push forward into late 1900s, the highway gets redeveloped to the north of the property and slightly north. I mean, we actually have claims running over the highway, but right to the north of the highway, and opened up a 4-lane highway. So instead of a 2-lane, it's a 4-lane. And as a result of that, Greg was driving by and noticed the highway had been relocated, and again went looking for the property. Other than the 3 patented claims, it was open. So we immediately went out and staked 11 claims, and that was done in early 2019. Since then, we've acquired 2,400 acres. We now know that this vein system is complete at 1.5 kilometers. We've drilled that. This high-grade vein pops along all the way along 1.5. kilometers long, excuse me. There's an additional 1.5 kilometers to the south, undrilled at this time. And we've just acquired a permit from the BLM to drill what we now call the Red Hill, which Greg believes is the heat source for all this mineralization. So if successful, I'm always careful with that. The last financing we did at 1.6, that particular financing, Greg himself put $125,000 into that financing at 30 cents. And as did I, but 100,000 in Canadian funds. I live in Vancouver, so the difference in Greg's in Arizona. So as a result of that, again, management put more capital in as well. So our CFO bought into the financing. A couple of the directors bought into the financings as well. Again, these are money that just gets put away and never sold, just collected, maintaining a good percentage of the company each and every time. The fund that was involved with us put in his additional to top up to 9.9, and this is when our new fund came in and allocated a little over $350,000 to the company at the time as well. So again, some of the original supporters, original people that came into the first and second financings bought in again as well. At whatever level, I don't have those in front of me, but some were putting 20,000, some were putting $50,000 in. But again, these are people that are looking at the long term. They're very happy how our company has provided them not only with information, but good drill results as well. The formula is on the website. If anybody ever wants to know what potential size we are, it's there. You just have to plug the numbers into the formula and work it out yourself. It's very simple, very simple.
Cool. And I hope we can get Greg on, by the way, in a future episode where we can do sort of a geology deep dive, because he sounds like someone who gets excited about the rocks, and I can be that way too, even though I'm not a geologist. But when you're mentioning that recent financing, who else was buying into that financing here, by the way, Mike? And why I'm asking that specific question is because, again, looking at the share price today, it's down about 15%, and we're at the 4-month hold period is now. I mean, this is the first day that the shares are free trading, and so maybe there's people exiting. I mean, you never know what's actually happening, but it looks like it. So who's exiting? Who bought into the financing?
That's $1 million question, first of all. But I think you're correct. I mean, I do see there was some selling. And again, it puzzles me why somebody would sell. But then there's also people that when they come into a financing, they sell and hold the warrant. That's certainly their prerogative. They're welcome to do so. It's a shame because the next drilling campaign that's now coming up could explode. And then what I mean by explode, if the proven fact is the Red Hill contains the mineral source, they're going to miss out. And that's okay. That's their business, not mine. And why isn't management selling? Because we see that this is the next opportunity for the company to really advance the size of this deposit. So good on you for noticing that. Like I say, August 4th, the actual paper came free trading, but you'll also notice there's buying going on. I've got bids in today. I don't know if they've been filled or not, but I'm not afraid to buy at these levels. Certainly when we did a financing 4 months ago at these levels, and that was a buy then. We're that much better off. We have the permits in place. We've had additional drilling come back with some very healthy results in it. Again, the company's in better position now than it was 4 months ago with our deposit that continuously growing.
So, well, you're going to be buying in the open market, because that would also be my follow-up question here is like, why wouldn't management be picking up those shares if they're coming onto the market? But it seems like you are.
I continuously buy in the open market, and it may be just small bits. Look, I had a bid in for the other day at 15,000 shares. I only got 5. Previous to that, I had a bid in for 10,000 shares. I got 1. So it's periodically, if I get hit, I'm happy to hold it and take it. If I don't, like wherever the market's at, I'm always buying. Somebody said, how much do you need? I said, it's not a matter of how much. I continuously show support. And again, at these price points, when we've been as high as 50, I feel that this is an incredibly good buying opportunity with the upcoming drilling as well.
Let's do indeed talk about that drilling that you're talking about here, because this is also a typical question on the first CEO barbecue that I do with CEOs. And it's kind of like, what's your main unanswered question? Like, now that you've received your BLM permit, which again did take quite a while, but so with the different strategies and types of mineralization that you're dealing with across your land package, what's the game plan? What are the next steps? What questions are you answering?
Okay. So the BLM package is 2 pads, which you can drill 40 holes from, 20 from each pad. Our initial drill campaign is coming up, and we are going to drill 4 holes vertically and then fan them out to establish whether or not the Red Hills is the source of this material. And if it is, then we just keep on drilling. We've got as many as 40 holes. Once we complete those 40, we can actually turn the axis of the drill around the other way and start drilling deeper into the heat source as well. So this is at least a year's worth of drilling, and it'll come in at, you know, around $3 to $4 million or more potentially, depending on exactly how we go about this. This is going to be core drill, so it's one of the most expensive. Obviously, RC is cheaper, but at the depths that we're drilling these holes, over 1,000 feet in some cases, you have to drill core. And I consider it the Bible. The Bible meaning that you can define everything. There's no second guessing it. It's real. You get to see the rock.
Okay. If you were to answer that main unanswered question positively, what do you think that would do to the valuation of the company? And you mentioned it would explode. That's not necessarily a technical term. So what would that specifically mean? I mean, you're at what I mentioned at the beginning, 23 million market cap. What's a company worth that knows what you don't know now, but that you're attempting to know in a couple of months' time?
The theory that what Greg has been working on, and we all believe and understand it now, is there had to be a heat source, a volcanic heat source where this material, speaking of gold and silver, originated. And this now will allow us to drill into that heat source. And if it's there and the grades are going to get better like they have at depth, this could be the significant turning point for the company, realizing that this model is now fact. Right now, it's basically an unknown, but if we drill it and hit it, then it becomes factual, and then the size gets orientated into this. This is well over 600 meters by 600 meters square in size, and we've yet to drill into it. So again, I'm being always careful. You can get surprises all the time, but if it's there and the size of it is that big, the ounces are phenomenal.
What does that mean though, more specifically? Like, are there any comparables to something that you can give me that you say, oh, we have this company in Arizona, they're worth that much?
That's that's always a tough question, honestly. It's like, tell me what the company's going to sell for eventually. I really don't know, and you'd be crazy to make a stand on some amount and then be wrong. So I'm always careful. But is it going to be worth 20 to 40 to 60 cents? No, I believe it'll be worth far more than that. Again, it comes down to math and numbers. If we prove up 2 million ounces, sure, we're probably in that $1 mark. And again, these are nothing that I can guarantee. But if we can start substantiating 3 to 4 million ounces, I don't know too many companies that are less than the $1 or $2 at that level. Again, our structure is one of the best out there. It has a very, very tight structure with only 77 million shares. Unfortunately, and I know that some of these companies had to do financings at lower levels, and they're very dilutive. They have 250 million shares out. You can't really move the market on something that big. So very fortunately, we're in really good shape, and the drilling commences and we hit. I think there'll be a significant rise in share value. Absolutely.
Well, why I'm asking this is because it's important for me that you know or have a target as to, how much money will you have to spend to make sure that, so not only to make sure that you can not only attempt to answer that question, but to lower the risk of you coming up with a negative answer. And what I mean by that is that what I'm thinking about is what's the relationship of the total budget? So G&A, consulting, drilling, assays, and everything else included. What's the relationship of spending that, raising that money, first of all, and then spending that money versus what that's going to do to the company, like, translate into market cap, if that makes sense.
Proven these first 4 holes, and if they do hit, I don't suspect it'll be hard to raise money or capital, because then people can see the actual size of this deposit increases that fast. The amount is going to be in excess of $5 million for this whole program. I know that. However, Do we take it all at once? Do we take it in stages? All these things come to play. What I wouldn't mind doing is maybe taking 1 or 2 or 3, advance it that much more with that many more holes into it. And again, if we're all hitting material like that, this is where the larger funds, institutional money will come in. And they are looking at the future value of gold and silver right now. And a lot of people are moving into the sector of that nature. So it'll be easier. The more we de-risk this, as you say, the funding will be easier done.
It'll be interesting to see how that develops over time. Why I'm saying that is because I'm thinking again about permitting, and maybe this is a point where you can talk to me more about permitting, is because you're permitted to do that work that you want to do, but in order to keep funding the company, or in order to potentially find a takeover partner, you would have to go through more permitting, right? So maybe this is a good point for you to talk to me about permitting,
Sure.
how that works in Arizona, and what else you have to complete.
The one thing we're enjoying, and I say that cautiously, is we have now a year's worth of drilling, maybe a little bit more ahead of us. Once we start this drilling, I am not going to hesitate. We will start acquiring permits to the south as well. And we'll start to initiate our eastern section, which is approximately 30 times larger anomaly than we're currently drilling. So that's could hold tremendous upside for the shareholder value as well. Again, very early stage. It'll be a couple of years before we can actually maybe even put a drill rig on that, but we're initiating it, especially if proven here on the first 4 holes on the Red Hill. If it's right, which I believe it is, then the magnitude of that eastern section, 30 times larger, gets that much more believable.
Okay. But to go back to permitting though, and being able to drill more and at different parts of the project, how is that going to go? Is there something that you can do now to prevent, having a 2-year wait period again sometime in the future?
I'm hoping, I don't know what the new government, or if there will be new presidency in the United States in November, but if there is, I would hope that they would change the current permitting process, at least make it allowable, a little bit more friendly. But that's something that I can't have any control over. So if you initiate the permitting process now, by the time we finish drilling on the Red Hill, that permit will be close or very close to being given, and then we can continue on. We can still go back onto the patented property and drill. We've got lots of targets there. We just hit 20-gram material that we want to see if that vein dips below, and we can hit it below the surface level right now as well. So there's a lot that we can still do. There's a tremendous amount of mapping and surveying that we need to do out in the eastern section. There's obviously some mapping and surveying we need to do on the southern section as well. So the company's got lots of work. It's not, and the drilling is, as I say, to advance it south, all we need is that permit. Get the start of it now, and by the time we finish drilling here, we can move over there.
What about local communities? This is BLM permits that we're talking about here, but what about local communities in the meantime? And also, fishes, birds, and every type of vegetation and everything else?
We have no issues to be concerned about. We're obviously in a mining-friendly jurisdiction. We have a mine, as I mentioned, the Moss mine, about 6.7 miles away, and then we have the Gold Road mine approximately 12 miles away. Beyond that, there was the Oatman mine, and that was roughly 14 miles away. No, this is a very mining-friendly jurisdiction. We have no wildlife, no plants or sage grouse to be concerned about for development in the future at this time.
It's just desert. That's it.
Yeah, it is pretty barren. Yeah.
What about, okay, good. So how much money do you have? As I mentioned, you did a 1.6 million financing. There's about $500,000 cash before that. 2.1, you're running the company in the meantime. How much money are you left with now?
We have just under 500,000 in the account now.
Okay. So
that's Canadian too, by the way.
Right. But so where'd that money go? It's 1.6 that you raised. What happened to that money? What did you spend it on?
So we just spent 91% of the dollar went into the ground. We just drilled 22 holes, and those results are already out in public now. That's where I mentioned the 20-gram material from.
Oh, okay. So those 2 holes were drilled from that money, and then for you to continue on from here on, you're gonna have to raise capital. How, when, from who, and all these things I suppose are important here, especially given the situation in the juniors market, but also given the situation that, I mean, it's the middle of the summer. No one likes giving you money now. No one likes raising money now. So yeah, financing, how?
Well, we've always been successful by going to the market when we do. Matter of fact, the last raise, we were only looking for 1.5. And as you saw, we got 1.6. A couple of previous marketing attempts we made for $1 million. We got $1.2 million. Again, it's when we feel it's right, we'll go to the market for it. Right now, the hardest thing for us to wait for right now is the heat to cool down. It's just simply too hot to drill in Arizona right now. The temperature over 42 to 45 degrees Celsius. So we would like to start, likely at the end of this month is likely when we'll be able to start that drilling. And again, everything going as planned. The market is finicky at times, and this is one of these times right now. Again, gold pulled back $100 in the last 3 days. Nobody saw that coming, and the market's a little skittish. So to go out and look for capital at this time is the same thing. I wouldn't be, and you're right about that, Antonio. It's summer. We do have some people that are talking though, but that's again talking at this time. That doesn't mean anything at this point. My goal is to start this program and prove the concept of the 4 holes that go into the Red Hills. And if they're successful, capital will come easier. So that might be the time to do it.
What about something else? I mean, because now we're just assuming that this will be a traditional equity raise. Is there a potential for any creative deals, if you will? I mean, you have other projects on the books. You don't talk about them in your presentation, but again, people go to your MD&A, they can see them. You have other projects. Is there potential to do something with them and finance the company that way?
There always is. The other 2 properties you mentioned, one of them is called Sycamore Canyon, and the other one is Silverton. Now, beautiful projects, but they're care and maintenance for us right now. We continue to develop on the Philadelphia. That has been our predominant property, and it'll remain that way. The other properties are green. So we haven't done a lot of work on them, as you can see. And the reason for it is we keep on getting good results out of Philadelphia, and our shareholders are vested in that. They don't want to necessarily go over and start working on Sycamore Canyon or Silverton when we're having great success where we are. We have some very serious companies looking at us right now, which is a real accreditation to Greg and all the work that he's done, and obviously where we put these drill holes down. These guys see the potential here. So again, it's just a matter of what goes on behind the scenes is always a work in progress.
Do you have any spending obligations though? And I'm looking at your financials here, last 9-month period, you spent 60 grand in Nevada on Silverton. You spent basically no money, but $2,000 on Sycamore Canyon. Do you have any spending obligations on those other properties?
They were already just met. The only obligation there is claim maintenance, which has already been paid. They have to be paid at the beginning of August, which has already been done. So again, we maintain everything, and we don't, I mean, the best thing I can say is everything is taken care of ahead of time, and we never let anything go to risk. Same as the claims on the Philadelphia property, they were paid first part of August. And again, that's 2,400 acres. So I'm glad we've been able to maintain these claims. There's, again, that's for shareholder protection as well.
Right. But again, to go back to what I suggested, potential deals to do with those. I understand they're greenfield. I mean, or they're early stage, but what would a potential deal look like? And are you actively looking for a deal? Are you actively considering those projects as potential funding, or are they just kind of on the back burner optionality type of thing?
Yeah, they're on the back burner right now. However, I will entertain if somebody wants to. We've made a couple of calls with respect to that about maybe a joint venture or earn into these properties if somebody wishes to do so. Again, there's great opportunity there, but it's up to someone to come to us. We're put a few feelers out to people that we think would be very, very welcome to do those. Again, it's summer, so it's slow to get replies right now, but both those properties could carry significant amounts of gold as well. But again, just to keep it straight, we are so exclusively focusing on the Philadelphia right now.
Right. The main purpose for me in these first conversations is kind of get a feel of the CEO himself and also get a feel of kind of your corporate strategy here. You mentioned that eventually you want to transact this property. You want it to be taken over by someone else. And there's no specifics that you can tell me. No one has a crystal ball. I know you cannot tell me how much money you're going to get for it or when that's going to happen. But what are you assuming? I mean, I don't know. You must be thinking about it when you're walking the dog or whatever else you're doing. You're thinking, oh, it'd be nice if, we have it transacted in 2-3 years or whatever it might be. What's that timeline for you personally?
Again, those are questions that are very difficult to answer. I would say, providing that we hit on these red hills, that transaction could be sooner than we would all expect. I mean, again, it depends on what the market's appetite is for. This will be a proven discovery on this drilling campaign. And if successful, I'm sure we have several CAs signed on the company right now that would advance them. And it just takes one, and it's sort of like a dominoes effect. Others will follow. Or, I mean, if one puts in a bid, there will likely be more because everybody will know that we have a proven discovery here. And it's already a discovery, sorry, but a proven resource that will be much more expandable. And mid-tiers and majors are looking for that opportunity right now.
That would also be a follow-up question. It's like, do you have people already interested? Do you have those connections where you have people waiting for the tree to fall, right? Because if a tree falls in the wood, doesn't make a sound, nobody hears it. Did it make a sound? So that's kind of the thing I'm thinking about. Good point on you having signed CAs. What about, and this actually may be kind of another impossible question here, but what I'm thinking about is just overall risks, right? That's part of the point for me having these conversations is what other risks are we dealing with here? One of those is the geological risk, of course. We have high grade veins and stockwork zones. There are technical challenges with that you potentially might be facing. But what else? I mean, what else have you identified? Again, while you're walking a dog, you're taking a shower, you're thinking, oh, I hope that doesn't go wrong. What are those thoughts that you're having?
Just exactly that. I mean, every time you drill, it's an unknown until you drill it, and you have to drill to find out. So it devil's advocate, right? The minute you put a hole in the ground and you find 20, 30 gram material or 72 gram material like we did, the next hole may not be at that grade. And then the market goes, oh, what's going on here now? You know what? These are a pinch and swell of this vein, of this high grade vein anyways. And it's interesting to what the old miners had done. There was a pit here, there was a pit here, but these guys dug that material with a pick and an axe, and they had to do it by hand. So they didn't waste any of their energy. They had to go after something that they knew that was there. For us now to spread this over 1.5 kilometers long, you can see where the vein has swelled and the grades are nicely in there. The area that we're drilling next in the Red Hills is that thicker stockwork, which would be an open pit concept now, as opposed to what the miners did back in the 1930s. It was simply a high grade vein, and they just mined the vein itself. And we've got perfect example of that now on the website as well. We found an adit that it was buried for over 115 years. And in that adit, they went right through the mountain, and it's about 5.5, 6 feet tall and maybe about 7 feet wide. And they just went right through on the high grade. And that's all they mined at 20 gram material. Beautiful, beautiful material. The shaft down, we couldn't go down because it was too risky. There was a lot of unknowns. And again, it's not something we wanted to put personnel or anybody at risk. So we boarded over that and then walked to the end. And there was a large stockwork in there as well. So now we want to go down dip of that. And that's on the patented property, by the way. So we can get permits within 2 weeks for that. But you go down dip and see if that vein continues down to 4 to 5 to 600 feet below the surface. So all this adds up to how big is it? And that's a question we'll continue to ask, but we won't know until we drill. So every time we drill, we get those answers. I see this improving with each and every hole now, especially into the Red Hills. And again, if successful here, this opens up a really big picture.
Again, I hope we can get Greg on and talk about the characteristics and orientation and density of those veins and what kind of techniques he's using to deal with those challenges, because they are real challenges, although there are ways of dealing with them. So that might make for again a nice follow-up. You did mention something, Mike, just a couple of minutes ago, saying that you're going to have a proven resource. There's a proven discovery. We know there's gold there. Now you want to prove up how big it is, how consistent it is, and all these things. I was under the impression that you don't necessarily want to rush an MRE or a PE of any sorts. Do you think you need to have that, though, before you can start entertaining the idea of a buyout?
No, my answer to that question is no. I don't believe so. Look, any one of these companies that have signed CAs with us, they already have their numbers. I'll give you a case in point. One of the companies that came and toured the site for 3 days, I instinctively asked them all this question at the end is like, what do you think we have and why was there an interest in us? And one reply, which I respected, it was the quickest and simplest. You said, Mike, we wouldn't be here unless you had over 1 million ounces. There you go. Now, that's a statement from somebody else, and I'll back that. But I mean, I can't say that we have 1 million ounces. That's just not allowed to be discussed. But I was increasingly happy with 2 or 3 other companies, almost the same reply. Look, we know the size of your resource, and we wouldn't be here if it wasn't big enough. So it's there, and I'm happy with that. We've done internal numbers, and I know that I'm very happy with the numbers that we have already. And only 131 holes, excuse me, into the system. It's one of the largest and most robust systems that Greg has ever worked on. And that's 43 years in the industry. That says a lot. That says a lot.
Well, why don't you tell the market about it? Like, what's the strategic thinking behind not doing an MRE or a scoping study or whatever else?
Okay. It's approximately 3 to 4, maybe $450,000 now to do that US, to do an initial 43-1. The problem I have with that is if we got 130 holes in and we put out this number, you sort of capped yourself. And then the next 20 holes, you hit on all those 20 holes or even 15 of them, and then you increase the size of your resource again. Well, you just wasted that $350,000 because your resource has got that much bigger. Meanwhile, you've told everybody you only have X amount. Well, it's not even realistically true. Until we've put several holes into the Red Hills, I wouldn't even want to put an estimate out and spend shareholder money like that, especially if these holes continue to hit. Let's wait until we see some outer edges where we maybe have limits. We have no limits. It's open, north, south, down dip on all directions. Again, it would be foolish for us to spend money like that right now.
And again, it goes back to maybe what I said previously is how do you spend money in order to translate it into market cap? Because, I mean, maybe it doesn't sound like the most romantic thing out there, but that's what we want as shareholders, right? We want you to spend money that translates into market cap. That's kind of the reality of it. Yeah. So, and for you, that activity now of spending money is just drilling. That's what you think is going to add to the market cap. What about maybe not you spending all that money? What about getting a JV partner to spend money on your project that adds to your market cap? So someone else spends money, adds to your market cap. That sounds like theoretically a good deal.
Yeah, absolutely. How much do you want to give away the company? I mean, if you do a JV, you're losing the percentage of that company. Right now, we have 100% of it. And I think our shareholders are happy that we do. Again, if the right fit comes along, obviously that'll have to get shareholder approval as well, management approval as well. But if you have the right fit, you're absolutely right. As somebody that I know and we all feel very confident in to take it to the finish line and develop this for shareholder value, absolutely. That's what this is all about.
But that's not it doesn't sound to me, you don't have to confirm or deny it, but it doesn't sound to me like it's in the works right now based on what you're telling me.
No, I cannot divulge that answer to that question. So
do you have 20?
I think we've said enough to know that there's lots going on behind the scenes right now.
Yeah, there is. That definitely is the case, especially now that you have that permit in hand, which I've mentioned a couple of times, but it's getting to a point. I read an S&P Global article last week or 2 weeks ago saying that the US has the second longest development timeline in the world at 29 years on average from going from discovery to actually getting into production. And that red tape that is growing is just getting annoying. I think I don't want to get too angry here or whatever, but it's at a point where it's costing shareholders dilution and time
Yes.
for companies to get those permits. So you have that, you create value through the drill bit. That's what you want to do here. You do have 20 million options and warrants combined. So this, as I mentioned, 13 million, 13 million warrants outstanding. There's about 7 million options outstanding. Are any of those in the money? Are you expecting any of that money to come in?
Yeah, great question again. And absolutely, we've had two very successful warrant exercise, 100% exercised. That's happened over the life of the company. Management exercised 1.3 million options themselves without selling a single share. I think that's incredible, and that brought in a significant amount of money to the treasury as well. Are there some in the money? Yes, they are. Most are really close to this price range right now, so I wouldn't even entertain talking to them, shareholders that is, or management if they wanted to exercise. But there is a few that are. Those are expiring in February of next year. So the timeline is going to be short, but that could be another good source of revenue coming into the company. Absolutely. And people will be informed on that. I mean, I always take a great amount of pride is keeping shareholders informed. If this turns out to be another 100% exercise, I'm more than glad to make a press release with that respect. And people then know that there's that much more capital in the bank that we can go and do much more with.
What's I typically mention it in my overview, but I think I didn't see it on your presentation. But in terms of insider ownership and who else owns the company, where is that now after the exercising of these options in your open market purchases?
Okay, I would have to do the math on that, Antonio, but here's where we situated ourselves up until May of this year. 28% was owned by management of the company. 41% was held by friends and family. 9.9% of that was held by one institution in Zurich, and about 3% to this new fund, and the rest was retail market.
Okay.
I can tell you, I just received the Nobo list. We have 328 shareholders in the company now.
Oh, total. That's good.
Yeah.
That is
a
actually
nice
decent.
tight bunch too.
How do you achieve that actually? And what's your strategy behind building the shareholder registry? I think it sounds like a vague question, not necessarily a question that people expect getting all the time, but it's important in my opinion. You're mentioning the Zurich fund, which is interesting to me. It sounds like you're traveling, trying to diversify your shareholder registry as well. But how do you think about building shareholder registry? Are you even thinking about that?
It's always something you're always trying to do. Absolutely. Getting the message out to people is difficult when the market's not really interested in the sector. This is the worst this sector has ever seen. So it's difficult to market anything at this time anyways. But I think with our track record and our proven spending, that people are recognizing that a lot of their dollar goes in the ground, and that's tremendous. And it's not spent on lifestyle or for that matter, management fees. Take a look at our management fees. Greg and I pay ourselves very, very, very low amounts of money. Again, that creates more opportunity for more drilling to go into the ground. As far as the shareholders go, I think that's one of the biggest reasons that they're staying with us is they know that money's not being spent frivolously. It's being spent properly.
What else are you doing this year to keep building that? I mean, are you traveling? What conferences and what else are you looking to do?
I generally try to take in the big one to me is obviously the PDAC in Ontario. I do try to attend that at least every other year. Beaver Creek's got an interest, and we'll see where we are with time frame with drills. That might be the opportunity to start to talk at that location. And I'm always available by telephone or by Zoom or email for that matter. So conferences, again, I don't like to be the only guy in the booth because you can have 4 or 5 people trying to approach you and you can't get to them all. So I really hesitant to spend money at conferences just because I don't see when you're by yourself or even with 2 or 3 people, it's hard to get to everybody. Greg and I regularly attend the Northwest Mining Association show in Reno, Nevada, and that's in December. That's an annual event that we do, and that creates opportunity for us not only to see some of the suppliers, but see new shareholders as well at that location.
Right. I tend to agree. Conferences have gotten more more plentiful. There's more conferences out there to be attended, and it's yeah, I have my opinion on conferences, but I might be biased here, of course. What let's maybe work towards ramping it up here. Mike, what else do you have going? What do you think the next news release is going to be on? When do you think that's going to come out?
Well, we have our AGM coming up first, and that's on August 22nd. So you can definitely look forward to a press release immediately after that. There is something that will be released in there that I think, again, some strong appreciation from shareholders will be seen by that. We have approximately 2 other releases that are being worked on right now. Again, we're just waiting for a few things to materialize, and that will also be put forth.
You said the AGM. That's an interesting point, actually, on the AGM, because that's not typically something that's widely anticipated, looked forward to. Sometimes it's really just a formality. You've made me curious now. So is there anything else you can tell me more about it?
Well, it gives the company, I mean, all the directors will be on conference for this one. Again, we don't bring them all in by aircrafts and have them stay expensive hotels. We do this all by Zoom. And the board advisors will be attending this as well. So it's going to give Greg the opportunity to speak about the project, what his findings are, what his feelings are, and it'll give us a chance as a group to talk about things. We've got a significant board support. Yale Simpson has sold 2 his properties in the past to major corporations. So, you know, he's a well-established, geologist. Again, over 40 years in the industry, knows what he's doing. We just had Phil Yee come on board. Now, look at the track record of that young man. Just incredible success in his past. Just came out of retirement and really took an interest in what we're doing, liked how we're spending money. I mean, he was a CFO for many years himself, and he sees the potential of the size of the deposit, and he also sees how things were run. And again, it's not a lifestyle, it's putting money in the ground. Jim Ingle, I mean, I can go on and on. All these guys have been tremendous support with great outreach. People have a lot of respect for our team, and it's going to get better. So I'm really looking forward to what our future lies.
Some of those names you're mentioning, they're familiar to me. Would there be any synergies with them? Because I know some of them have other jobs as well on top of that. Where, I mean, I don't want to be too speculative or say too much here or put you in an uncomfortable situation. But I mean, it seems like there could be a synergy there as well.
Yes, I'll answer that. Yes.
Fair enough. I think people can figure that out with a little bit of reading if you just check the background on board members and where else they're active. LinkedIn, again, is a good tool to do that. You've also made me very curious on Greg. I would absolutely love to talk to him in the future. But Mike,
Absolutely.
I think this is a good overview for the time being. We've gone through the basics on the corporate structure and strategy and stuff like that. What am I forgetting to ask you though? What did you come here hoping to talk about that I'm failing to bring up?
No, you've touched on a lot of the areas that I hope shareholders and new shareholders would appreciate to know. I guess the biggest thing, and I've always felt this way, if I'm putting my money in, as we have done and continue to do, I think that's reassurance in itself. But then look at the drill bit. Look what the results have been. I mean, this discovery is getting larger and larger and larger with each and every hole. That's got to have a lot of merit. And again, people are recognizing that now in a very low marketing company. It takes a while for people to pick up the pieces. And now we've been talked about quite a bit, and that's growing. We just had another site visit here just at the end of July. I admired that individual for coming down because it was 42 and 45 degrees Celsius. That's well over 110 Fahrenheit. And he went right through the whole property with us and stayed with it. But kudos. I mean, they really enjoyed it. They thought it was like, this is a lot bigger than we anticipated. So it gives me encouragement when you see people of that magnitude looking at us in that way. You know that we've got something very significant.
You actually reminded me of something that I should have asked, and that was when we were talking about marketing and how do you tell the story, was budgeting on the G&A. Again, I mentioned you were at around $40,000 in terms of G&A. Is that almost sounds unsustainably low, and you were at about 15%. marketing, I believe is what I said out of that G&A. So $6,000 a month. And there's, you don't want to overspend on marketing, but you also do want to spend something on marketing so that the story is heard. So talk to me about the budget on G&A. Can you sustain it at 40,000? And what percentage of that do you think goes to marketing so that it's efficient, but also effective?
Yeah. And you're so right. Look, as far as I'm concerned, and I might be wrong in this, but I don't think I am, spending any money on the marketing in the last couple of years it has been fruitful. I mean, it really hasn't. I mean, you might have a little bit of reaction to it and then the stock pulls back again. So I'm really mindful where we spend money. And unless I can have a proven success track record, I don't do it. And it's hard because I'm the one that's doing the marketing and I'm not patting myself on the back. That's just my position. That's what I'm supposed to do. But you've got to find these unique people, and we do have that. We've got some phenomenal shareholders that are looking long term, and those are the ones you want to invest in. You don't want a guy buying the stock at 30 cents and selling it at 32. That's, you're just continuously chewing paper, and it's hard to move. The value that we have is to the upside right now, and people that are coming in, you'll naturally see the stock price rise because they're so tightly held. There might be 100,000 shares traded in a day, but the stock's going to go either up or down because of that, because that's big volume for this company. Normal volume is 40 to 50,000, I think you mentioned. And I appreciate that. That's, again, it's a sign of a tight structure.
It is. It's a sign of times too. That's something that I'm thinking about. Unfortunately, I do a weekly juniors market overview podcast with a friend of mine, and we get excited if there's like a $200,000 volume in a week in a stock. We can get excited about that. And that's kind of sign of times too that made me think about it. But yeah, Mike, this has been great. I don't want to waste your entire day. You seem to be at a way nicer location than I am, so I'll let you do your thing. Thank you so much for investing your time. I mean, hopefully we can do this again soon.
I really look forward to that opportunity as well. And thank you. Yeah, I'm just having my last day of vacation on the cabin. So thank you very much.